Guys, it is Chris and Jake here on the Smoke Kings podcast. Dropping it. Episode number 2.
We don't have a button yet.
Episode number 2. Here we go. So Jake, this week has been an interesting week. I had a lot of kind of confrontation, we'll call it. The David McKnight, Power Zero author, called me out. And he kind of doesn't know what he did. He just inspired me more than anything to kind of like level up, you know? And so I've just been like doubling down on content. You know what it is? It's like, it's one of those things, you know, this stuff and you do it. It's like anything else. It's like you do it and you talk about it all the time. And then when you get challenged to a certain level, it forces you to like even dive deeper, right?
To step up,
like, and so there's been a lot of really cool things that I've discovered and kind of like gained more clarity about and gotten what I think even better at, like communicating why I think IUL suck. And you know, so I'm going through a lot of this. Just been really hammering and kind of like clapping back a little bit. Done some reviews on some IUL illustrations this week.
Okay.
About David McKnight's favorite IUL product, and I just decimated that. I did my response video. Have you seen the response video that I did?
No, but all right, so you gotta, you know, I've been in a cave. I haven't, if you go to my Instagram, I haven't even really posted anything. So you catch us up, Chris. Please give me the tea.
Well, so a lot of people are probably going to know this, but like, so David McKnight wrote, did this video basically telling me, debunking my perspective on IUL. And so it took me a couple of weeks, but I finally, and I wanted to do it right. He inspired me to dig deeper. And I kind of went, I went deeper and I filmed like almost an hour long video kind of responding to his 14-minute video. Because I'm not the kind of guy that like edits these videos together and takes like little tiny clips and gives like 2 minutes of talking. Like I want to educate, I want to like dive deeper and like really, really teach. Right. And so, so I did it and it was really cool. It was really fun. Hopefully it served people, helped people. And then the other thing is, one of David McKnight's favorite IUL products is the Allianz Pro Plus Advantage. And I did just coincidentally had somebody reach out, had an illustration of one and was like, hey, can you give me an evaluation of this? And so I had the team kind of look through it. We put it up. And then I just did a video on like breaking down all the nuances of the product and educating people on like what a train wreck that product ultimately is.
So this call out that this guy David gave you, is this what sparked your 75-day warrior assimilation training?
There's a lot of things, that are going with that. I'm just feeling like ready to fight right now, I guess, more than anything. I just I guess it's the season. It's prepping for summer. There's a lot of things going on in the world. I just I don't know, man. I'm just feeling fired up.
So okay. So now we gotta peel back some stuff, bro. Like we gotta peel it back, man, because I'm sure that he had a bunch of people that called you out and he called you out about it. You've been baiting people for what, 2 years?
Yeah.
Almost about check me on my stuff.
Yeah.
And apparently he's trying to check you on your stuff, right?
Mm-hmm. Yeah. I mean, that's what happened. He stepped and it was all like, it was exciting because it was him, right? Because he's a pretty well-respected IUL guy in the market. It was disappointing in the sense that he came pretty weak, right? Like it's like, and it was almost too easy to respond. But like, here's the deal. The funny part to me, like, talk to me about this. Like, here's my deal. If I ever call someone out, and like, here's the deal. I have no problem being called out, right? Like I have no problem him coming after me. Actually, it's exciting in a way. I go after people. I've gone after Doug Andrew. I go after Dave Ramsey. I go after people. But I think there should be a rule. If you're going to call somebody out publicly, you should be like obligated to publicly debate them in a live forum.
I like that.
If you're not able to do that or willing to do that, you should shut your mouth.
So, all right. So wait. So he called you out,
Yeah.
but he doesn't want to debate live.
No, he refuses to basically right now. And he's like, oh, well, he's like tap dancing around it, like tiptoeing around it. And in the video where I like kind of came back at him, I was basically like, listen, I'm not going away. Let's debate live. And he's like, and in his chat string or the comment string of his video that he came at me with, he and I kind of had this back and forth, so everybody can go look at it. And he basically admitted to never really watching any of my other videos. He said, I only watch one video, so I really don't understand your whole perspective. And I'm like, well, why are you making a video of something you don't understand, first of all?
Yeah. Why are you trying to challenge the GOAT? And you ain't studied
I
the
know.
GOAT.
I challenged him to a debate, and then he's like, oh, I don't know. I live in Puerto Rico. And I'm like, don't threaten me with a good time. I'll fly to Puerto Rico. I'll bring a video guy. I'll pay for this. I'll pay for everything, man. Like, we'll stream it live. The only caveat I have is
all the smoke.
Yeah. I'm like, come on, man, let's go. And then he just kind of like went dark. It's like, I don't know what he thought I was gonna do. But like, I'm in this place now, man, where I'm like, listen, and I said it in the video. It's like, man, you got an opportunity. If you think you're so right, this is your opportunity to shut me up. So it's put up or shut up time. The only way I'm going to stop tormenting this guy now with content and doing reviews on his books, and I bought all his books, like I bought all his content. Unlike it, I'm not going to review or do anything on him until I actually read cover to cover everything and like evaluate his blog posts and go through all these different things. I'm not going to do anything until I actually understand what I'm talking about, right? Like unlike him, where it makes a video based on one interview that I did and like takes little clips and misrepresents what I'm saying. So I'm not going to stop doing all this and coming at him until he either gives me a public apology and rescinds his comments on a public forum, on a video that stays up, that people see, or he debates me live. What are your thoughts?
I love it, dog. We got to show up all the smoke. And, I like the smokery. The smokery makes me feel like if you're not willing to back up what you teach, preach, and talk about, you get on. Here's my opinion. Like I always state, if somebody does not like the way that I teach or what I'm teaching, they feel like it's incorrect. Everyone has a right to call somebody out on it, especially if it could potentially hurt or steer people in the wrong way. However, before you call somebody out, I would advise people to study their work. You can't call somebody out and not study their work. I remember when I used to play ball, and before I would start trash talking somebody, the reason why I trash talked a lot when I played basketball in college was simply because I knew nobody studied film more than me.
Yeah.
Like I knew your weaknesses. I knew your pain points. I knew what make you mad. I knew what make you cry. I knew what makes you happy. And I just would do it with a smile on my face. And before you know it, you don't know if I'm a nice guy or an evil guy. But at the end of the day, you're confused. And I scored 30 points on you. It is just very simple as that. And so I think that you're doing the right way. I think that you should stay on his neck. I think that he don't want to step this way because he gonna get a double smoking ass whooping over here.
What do we say to this? What are your thoughts? Do you have any thoughts before? I have a lot of thoughts.
Well, you're the Curtis Ray, you're the Curtis Ray extraordinaire. You can break down Curtis because you've been on Curtis' neck for a long time.
Yeah. So here's what I'll say.
So I'll let you defer to that. I got some other smoke I want to bring to the table in a second.
All right, rock and roll. So Curtis, here's what I'll say. I got a nice letter from Curtis's attorneys, basically telling me to take stuff down and whatever and threaten to sue me. I brought it through my attorneys. You'll notice I used to have a lot of videos up on Curtis and they're no longer there. And it's because
I was wondering why you took that down.
Yeah. So it was basically, there's going to be more. My attorneys basically told me like, take them down short term, revamp it, refilm it. There's a couple disclaimers I got to put up. It's BS, but like, I got to do it. Like I'm like, listen, I like to I like to do things the right way. And so if there is legal exposure or whatever, like, I mean, I'll take it down. I'm going to redo them. And they're going to be even better when I redo them. Honestly, they'll be more researched. They're going to be more organized. But my overall opinion on MPI is doomed. And the reason I believe MPI is doomed, now, let me caveat this, is my opinion.
Caveat, right? Disclaimer.
Disclaimer alert. It's my opinion. MPI is doomed. And here's why. Regulation AG 49A, if everybody who doesn't know what AG 49A is, it's the illustration regulation that allows for positive arbitrage to be illustrated on the inside of the index. So when you take policy loans, what happens inside of the illustration, and when you illustrate policy loans, I should say, it allows for perpetual positive 50 basis point arbitrage, right? Spread. And so when it comes to the MPI and the relock feature, which he touts as like this great saving grace of MPI spread, exactly. So when he touts this perpetual positive spread, ultimately regulation AG 49A is getting updated to what Bobby Samuelson says is AG 49B, and they may call it something else, but they're eliminating the 50 basis points of positive arbitrage. So you're not going to be able to illustrate positive arbitrage in IUL anymore, which makes relock just toast, right? It's not going to be able to illustrate the same way. He's not going to be able to play these stupid smoke and mirror games with people. And ultimately relock is doomed, in my opinion, anyway, because basically all it is hyperfunding. And he found a creative way and twist to kind of do hyperfunding. And that's all the relock feature is. And it's to me, it's BS. But man, he's a good marketer. He's good at getting people to buy into it. And he's got some calculators that I don't understand how the compliance department at Mutual of Omaha, which is his number one product that he sells, allows him. He uses his own calculator, which I don't understand how that's even compliant, to do that. But that's my take on MPI as a whole.
And my take on it is, one, anytime you create a new product or a new strategy out the atmosphere from the sky, and try to just do back testing from this point, and the back testing doesn't add any of the real factors of life into them. It's a perfect world back testing. So anytime you do any perfect world back testing, you can manipulate anything to make it say anything that only time is only going to reveal. And like we say all the time, like if you study like the IUL is a baby in comparison to all the other financial instruments that have been out here that's been proven or disproven over time. And I think the stuff is crazy. And to take a policy, to pull money out the policy, to start another policy, to pull money out that policy, to start another policy, to then pull money out that policy, to start another one, so that you can get this positive arbitrage. You can spend more time learning how to build a business.
But you know what? He's making commissions every time you do it.
And that's honestly, I'm just gonna say it. I think Mutual of Omaha is a piece of crap for even allowing it. I'm just gonna say it. You ain't have to say it. You got enough on your plate.
I think they're going to be liable ultimately at the end of the day when that all comes.
I hope they are. I hope they are. Because that's nothing but greed. They see him. They see that as a policymaker. They see that as a policymaker to be able to do it. And I'm gonna just say this. Colin asked, which scares us the most. What scares me the most is the damage that it's going to do to consumers. Like it's not even about who's right. It's about the consumers that's getting beat up. It's about the consumers that's getting beat up in the marketplace. And you remember when the UL first came out, pretty much everybody's UL bottomed out. And then they had to create this new version of the UL in order for it to make it happen, which is just the scariest thing on the planet, really.
Totally. Well, you know what, Colin's point, my biggest fear is the spread rates and the fact that they're using indexed loan options, and caps can go up, they can go down. I mean, I think they're going to go down or remain pretty close to where they are now. But when you look at the way that the loans work in utilizing the relock, you're never paying the loans back, so the loan expenses are compounding against you, right? And so that works when you
with
can
the cap rate dropping.
Yep. But that works when you illustrate 50 basis points of positive arbitrage. It looks really sexy on paper, but in real life, I mean, life doesn't exist on that spreadsheet and in that calculator. And so, what happens is as years go on, and let's say you're contributing $10,000 a year for premium, and then 3 years later, you borrow against it and you got 10,000 more for another premium. And then next year do the same thing, and you just keep stacking these policies. Within 20 years, you're going to have literally millions and millions of dollars of policy loans, because the compounding of everything is going to work against you. And so what happens is one negative year and you have a 5% loan rate, one negative year, you got $100,000 of interest expense on $2 million of policy loans that the policy then has to be able to support on top of the cost of insurance, on top of the admin fees, on top of everything else. And that's why these policies are going to have so many problems. Like the sad part and the scary part about that is the people that are participating in this MPI thing, in my opinion, are not going to know how bad off they are until it's too late. And here's the thing. I love it when regulation proves me right. I love it when, regulation catches up and finally puts in place rules that back up everything I've been saying for the past 5 years. Right?
And let me just say this real quick, Chris. Talking about regulation, right? It's always easier to pull wool over somebody's eyes when there's no regulation. Let me tell y'all why regulation is regulation. Because somebody finds a loophole. They exploit the loophole for their personal benefit. Mm-hmm. Then they claim that this is the reason why they're winning. Go sell that same thing to a bunch of people that's getting screwed over, and then the regulators got to come in and put an iron fence around the idea, and somebody's going to go to jail and somebody's going to have to pay for the losses. I'm not saying that they are, disclaimer, but what I am stating is that typically that's exactly what happens. And so just because somebody, let me just tell everybody this, especially when it comes to you building your wealth, your wealth triangle or your wealth foundation. Yeah. First of all, keeping it simple is the simplest function. The purpose of your policy is to be a warehouse where it stores your cash. It keeps up with inflation so that you can keep your purchasing power and you have the ability to leverage against it while protecting the number one asset in your life, your body, your ability to make money. It's simple as that. The policy is not supposed to be used as this machine that makes you rich. It's a machine that keeps you rich. It's a machine that keeps the capital where it's supposed to be so that you can go and do what you need to do. And I'm just going to be honest with you. Like, to get 5 policies or 10 policies to do all this other stuff, most people don't even have 5 bank accounts. Let alone 5 MPI policies that are quote unquote reloaded to do, it's ridiculous to me. And the amount of time that you have to spend to watch all you got to really be a connoisseur in this insurance game in order to come out alive in any policies like that, let alone, God forbid, Chris, you go, life's you. You lose your job. You got a business. You lose your clients. You have babies. You have a death in your family. You go through depression. God forbid lifes. And when it comes to life insurance, it's supposed to be simple, easy, understandable. The flow is supposed to be just right, and it's not supposed to be a product with all of these complexities to it, which actually makes it just as difficult or just as confusing as all these other financial products that are not making people money long term.
Amen.
Period.
Appreciate it. You just had it. Mic drop.
Period.
That's it.
So let's talk about a couple of things. I gotta talk about a couple of things. You talk about
you bring it.
My biggest issue, and you know this, Chris, and I'm gonna keep saying it. I want our clients and I want our viewers, and our smoke kings and queens to start doing this. If you run into an agent that is practicing private banking, ask them to show you their private banking strategies for their own life.
Yep.
It's simple. Like to me,
yeah.
This is just me. I believe that everyone that teaches the concept of private banking should be held to the fire and say, okay, you practice private banking. How do you implement it? How do you structure it? And how do you actually use it in your life? Not just selling policies.
Sure.
Chris, I had a Meritage literally just here 2 seconds ago.
Yep.
And when I was talking to them, I was telling them, listen, my clients got to go through a 36-hour mandatory training before we even accept them as a client.
Yeah.
Because you got to understand it in order for you to actually use it. It's not just about selling a product. If you're just going to sell an insurance product, you go sell a term or something. The pure insurance, it just gets them covered. You can't hurt anybody with a term. You can't hurt them. If you want to protect their money, ROP, give them a return of premium, get your money back. You know, I'm a whole life guy through and through. But what I'm stating, Chris, is if you don't know what you're doing,
right.
Can sell. You can get you a return of premium term or a basic whole life insurance policy, and then figure it out from there. But to listen to these kids on social media that don't practice it, and these adults, these grown folk that are really children, get online just to sell because they're good at marketing. This in itself is not. It's not the place that we should be trying to get behind and follow behind like what people are saying are golden, and not asking them what if you're truly trying to help me with this concept of banking or private banking. I should be able to get examples of not only you using it in your life, but I should also get examples of the strategy that you're using that has been here past the test of time. Not something you created 6 years ago because you want to be the next 401k man. You know, you want to be the next superstar, because these are people's finances in their lives that are playing with. I'm sick of all of them, honestly.
It's so true, man. I mean, like, the bottom line is IUL, a lot of people like to tout the fact that IUL has been around since 1997, which, by the way, would still classify as a financial experiment. It's got no history of success. But it was 2009 that IUL
does it?
But IUL really, I mean, 2009 is when it actually, cracked the 5% market share for cash value life insurance. And from 2009 to today, I mean, it's done nothing but underperform, its promises, not meet its promises to its clients, And so like, when you look at that, that's why I created the IUL challenge, right? No, I don't use VUL.
Nor do I.
So that's why I created the IUL challenge, is because, it's just one of these things. Like, all of these IUL influencers, not all of them, 98% of them are 3 to 6 or 7 years in the business. They haven't been around long enough to see what these things actually do long-term, yet they always want to talk like they know exactly what's going on. And then when I ask them to show me something and prove it, none of them are able to do it. So it's a lot of talk. It's like a big bag of hot air, man. It's like, and they all work with these IMOs, and they have uplines that have been doing the business longer. So have your IMO prove it, have your upline prove it, have somebody. If you're in this and you don't have a mentor that can prove it to you, you might want to rethink what the heck you're doing.
Chris.
Yeah.
So let's help our people out, right?
Yeah.
Let's go over. Let's give them a list.
Yeah.
Of what to look out for in an agent. And when it comes to who you decide to practice this concept of private banking or infinite banking or whatever with. Let's give a list of do's and don'ts. I'll go first.
You go first. Yeah. We'll just go back and forth. This isn't scripted, y'all. We don't script
this. This is
stuff.
not scripted. Yeah, this is top of the dome. So listen, first thing, run away. If you get a if you get an agent that says it can't lose, it get an IUL and it goes up to the market. Oh, there it goes right there. Boom. Okay, there we go. You already had it. Number one. Yeah, listen, if they say that this product can't lose, it has a floor that protects you. And some of them even have the audacity, Chris, to say like a stop loss in trading.
Oh yeah, there's a product that I did, the Allianz product that I just did the review on. I did the full 55-minute review of that. Like I went through all 55 pages of the illustration line by line by line and broke it down for people. And in that one, they have a 0%, 0.9%, so almost a 1% annual bonus. That's like a fixed rate bonus to be like, it's better than the 0% floor. We're going to give you this like bonus. It's going to get you more. And it's just all smoke and mirrors, man.
So what's your one?
So the thing that drives me nuts is the upside potential and downside protection conversation. So you just said you can't lose. So that's the downside protection, right? Like you can't lose in a policy. But the upside potential conversation is basically saying, listen, this thing is going to let you participate in the index, right? So, and a lot of people say you're going to be in the index, but it's really, I mean, most agents are pretty good about that now. And it's like, you're going to participate in the index and be able to have upside gains. And, when on negative years, you're not going to experience the losses. So you basically put that new floor, that new high floor in your policy. And it doesn't work that way, right? Like it's because you still have the policy charges, you still have the fees, you still have the cost of insurance, you still have all these things that go into it, right? And once again, when you're young, while you're accumulating money in the policy, it's not that bad. And I can see why somebody that's been selling these for 3, 5, 10 years doesn't realize how bad it is. But when you get to retirement, I did on this one illustration, listen to this. The IUL had $164,000 of premium total over a 10-year period. And by the age of 80, there were $964,000 of charges on the policy. So that doesn't happen with whole life, by the way. I'm not even kidding. It's insane. It's nuts. I would encourage everybody to go watch that video if you want to learn the ins and outs of how these IULs work over the long haul, right? And so that upside potential, downside protection conversation, if they use that and they use it as a sales point, to me, it tells me that they're just trying to sell you into their, kind of get you caught in their web of how they're trying to get you to buy into the conversation, right? And to that point, I would say, I mean, Jake covered the downside protection because you can't lose to market risk, right? Can't lose to market risk because of the way that they phrase it. So it's all semantics and wordplay. It's kind of like Bill Clinton. I did not have sexual relations with that woman. Well, how do you define sexual relations, right? Like I didn't lose to market loss. Like, how do you define that? Like I could totally rip that apart and define it in a completely different way. Does that make sense? Is that I think it's a pretty good analogy. I mean,
that was a darn good analogy.
But here's the deal. This is why I created the IUL challenge, is because we just came through the greatest bull run of all time. If your product gives upside potential, if IUL illustrations are quote unquote conservative numbers, why the heck are not every illustration coming through the bull run outperforming the conservative illustrations, and providing you upside? If you didn't get upside during beating expectations during the greatest bull run of all time, when the hell are you going to do it?
And what he means for those that are new to this insurance conversation, what he means is when we talk about the cap. So in the IUL, they talk about, the 15% cap, 12% cap. And actually, during one of the greatest bull runs in the market, which means the economy of America was doing absolutely amazing. During this long ASS run, the cap rates were coming down. So y'all got to understand the IUL started off illustrating 15, some even freaking 16%. You know, caps.
16.5% cap rates in 2010.
16.5. And during one of the greatest times in U.S. history, it goes from 16 to some or even down to 7.
Totally. I was just interviewing Bobby Samuelson the other day, and in that this guy, if you don't know Bobby, he's like the wizard when it comes to understanding products like this.
Yeah.
The cost of a 10% cap. So basically, that's like you have to set the expenses because of the options cost and the options budget and all that stuff. Well, this is just the options budget. The cost of a 10% cap back in 2011 was 3.9%, meaning if your general fund earned 3.9%, which back then it was earning a lot more, you could have a 10% cap. So that's why cap rates were higher. Right now, today in 2023, the cost of a 10% cap is 5.1%. Okay. And so most companies are doing 4 to 4.5. That's why we're seeing caps come down. Now, a lot of companies will offer higher cap rates only to reduce them later. And they're doing that on purpose. And they're writing off the difference as marketing expenses and business acquisition expenses. And that's just part of it. I saw a question here. I want to answer this because I think it's really important. And it's kind of pivoting a little bit, but why all whole life if it's a long-term instrument when comparing the returns of max funded VUL versus fixed whole life side? So variable universal life will always win over the time if you got the stomach for it. So I think here's the reason, because when we talk about VUL versus whole life insurance, or whole life insurance versus investing directly in the S&P 500, or whole life insurance versus real estate, or whole life insurance versus any other investment, every other investment is going to get a better return. And you have to look at the difference in the function of risk, right? Like there is no risk in a whole life policy if you fund it properly. There is risk in a VUL. Will it outperform? Probably, potentially, but it's not checking the right boxes, right? It's not solving the same problems that whole life solves. And I'm a big believer, we need to focus on financial structure, not just chasing returns, not just trying to maximize returns. We need to build our emergency funds. Americans are massively, wildly undercapitalized. There's a massive lack of liquidity, a massive lack of access to capital when we need it for opportunity. We need to build our emergency funds. We need to build our opportunity funds. We need to build our business reserve capital. We need to prepare for opportunity, because when we have that money available, Jake said it earlier, the whole life policy is simply a warehouse for your capital that you save on a guaranteed basis that will grow and beat inflation long term. And then you borrow against that. That's why I wrote the book Cashflow Hacking. You borrow against that money, invest in other cash flow assets, invest in businesses, invest in things you understand. Don't put your money in assets that you don't control. I'm a big believer that we are where we are in life because of who we are in life. Most people suck with money. Most people have a horrible relationship. Most people don't understand with money. If you want to get better in life and better with your money, stop outsourcing the success of your money. Just, step into just being massively accountable for the results in your life. And that all comes with saving first, but saving with the intent to invest. And if we're talking about saving, not investing, we always have to start with whole life. And I'm not saying VUL is bad for the right person, because I don't believe it is. It's different than IUL. I don't have a problem with VUL. I have a problem, though, that VUL, I think, is prematurely sold in most situations.
Yeah, I think that when it comes to, we're talking about building wealth. And wealth is subjective to the needs and the desires of every person, every family. In my opinion, wealth is your ability to get or do whatever you need or that you want within reason. And it's not a you don't have to budget for it. It's there. Like, you don't have to go through it. It's there. You can go through hell and hot water for 2-3 years, and your reserve is there to protect you. And here's the biggest piece that I want everybody to understand. So many of us are trying to, there's a couple of things. Another agent or a reason why you need to stop messing with an agent is when they're trying to get you to get into an insurance product to skip the art of asset investing. And when I say asset investing, I know that policies that we talk about are in assets. But when I'm talking about assets, I'm talking about businesses, real estate, land, acquisitions. I'm talking about really investing to make money. Now, before you get to investing, you have to master earning. You got to master making the money.
Yeah.
Then storing the capital so that you can invest it when you know what you're looking for, when you know what you're looking to get into. And there's so many of us that are just trying to skip the steps.
Yeah.
You cannot skip the step. And this is why so many, listen, if everyone just were to take a step back, remove emotion and think logically. When you think about the concept of banking, it is a surefire way of wealth creation. Here's why. Banks hate risk.
It's true.
So to say that you're practicing infinite banking, private banking, secret banking, your banking, bank of this, whatever it is, and you're incorporating high levels of risk.
Yeah.
Unnecessary fees that can be changed per the contract you signed at will. That is not logical at all. And it's only an emotional decision. But when you pull the caps back, we're like, man, I just want to put my money in something and not work. That's what it is.
Yep.
I want to put my money in a vehicle that's just going to do something for me, and I don't have to look at it. I don't have to study the game. I don't have to study the industry. I don't have to study the product. If you're investing your money into anything, you must study the product, period. And the product could be an insurance product. The product can be a business product. The product can be a real estate product, an asset. I look at all asset classes as products. And if you're not studying that product, you're going to get just completely destroyed no matter what. We're trying to skip the steps, Chris. And the step is rule number 1, earn money. Get good at earning. Number 2, get good at reserving your excess capital. So many people are trying to invest money and you're negative as far as your own household and being profitable. You're not even profitable taking money home from your job. At the end of the year, we're depending on refund checks and swiping cards to fill the gaps of our inefficiency and learning how to earn money and keep the money that we make. Simple. Earn and keep. If people just practice increasing your skill set to earn more money, dumping your surplus cash into a dividend paying whole life insurance product, it is simple. It's not sexy. It's not cute. It don't give you the feels. It don't make you feel like you're doing anything. But wealth is boring. It's ugly. It's simple. It's doing the same thing over and over again, because when you make money, you don't want to go back to what you used to work, where you came from, to get to where you are. And what you're going to do, you want to encapsulate your wealth so that when you make a decision to actually invest, you can make the right decision. Warren Buffett said, I don't look to get into the market every day. I look to be right 4 times a year. 4 times. That he says, before I make, I've read countless amount of annual reports for eons and eons of time before I decide to invest my money anywhere. I guarantee you, if these clients just did their own due diligence on the product that they're putting thousands of dollars into, just do your own work, you're going to realize what a terrible mistake it is to make an IUL your first, second, third, fourth, or fifth stop, because it just doesn't make sense. If you want to get index gains, or if you want to get investing gains, how about you learn the stock market? Go gamble there. How about you learn buying and acquiring businesses and growing them and grooming them? How about you learn the real estate game? Go into these asset classes that are known for increased capital appreciation versus the other. Sorry, Chris, I got passionate.
No, dude, that's so amazing. Like, to that point, at the beginning of everything, all those things, you know, real estate, not bad. Stock market, not bad. You know, business, not bad. They're all really good things. But the question is, the value of it is different for everybody based on your expertise and your skill and your understanding and your ability to find opportunity, your ability to tolerate risk. And ultimately, the number one thing that dictates the success or failure is how well are you capitalized, right? Like, how well are you saved? If you haven't saved and built a foundation before you go invest, I guarantee you, you're going to go through things. And this is the problem with America. This is why when we talk about the growing gap between the wealthy and the middle class, this is why it's happening, because the middle class has been taught to go to school, get a job, invest in a 401k, give up control of your money, give it to the government, defer taxes when the taxes are going to be higher later, and not save. Most people think that they're saving in a retirement, but you're investing in a retirement plan. You're not saving in a retirement plan. And most people will save that and they feel comfortable, and then they don't save, or they're invest in that and they feel comfortable. They don't have enough savings to deal with life's emergencies, to deal with what happens. And then what happens is the market is cyclical. It's not linear.
That's right.
It goes up, it comes down. It goes up, it comes down. Unemployment goes up, it comes down. It goes up, it comes down. If you work for 40 years, you're going to go through 5 boom bust cycles. That's just the way this world works. It's like clockwork, right? And so if we know that's going to happen, why the heck are we not preparing for the down cycles, right? And what I love about this is, like, having your money in a whole life policy, it prepares you for the opportunity when the market cycles go down, right? And the thing with this is like, when we look at you know, like how you're positioning your personal finances, if you have all this investment going on, you can feel really good. But if you don't have the savings, if you haven't built your foundation, if you don't have your life structured properly, stop thinking about the financial returns and start thinking about the financial results in your life, and start thinking about what's going to happen 10 years from now. If you got all your money in a 401k, but nothing saved, and then you lose your job, and 2008, 2020, 2001 happens, and you lose 40% of your portfolio, and now you have no savings, and now you got to liquidate negatively performing assets just to survive. And you just spend a decade feeling on top of the world, like you had a good job, good pay, saving for retirement. And then boom, 11 years in, you got to start over. That happens to you one time, your whole retirement plan is out the freaking window.
I think that I could go on and on about invest. I mean, most people don't even know their fund manager.
Yeah.
Like what are the habits of this person who's managing your money? Are they druggies? Are they alcoholics? You know, are they undisciplined? Are they, you know, parlaying because they know, you know, you have forward. These are things you got to really think about.
Totally.
You know, as you're doing, and here's my thing, y'all. I'm just passionate. You know, I'm really passionate about you understanding that no one's coming to save you but you.
Yeah, amen.
And I'm gonna give y'all a real example. In 2021, I had a terrible business partnership. Terrible. 2021 had a terrible business partnership, and a product was sold that didn't go through its proper due diligence or get properly approved. And it came back to bite us in the butt, and it cost $3.5 million, not an opportunity lost, in money out of our account.
Very hard cash.
In 45 days. Do you know what saved our company? Because we practice private banking.
Mm-hmm.
We had loads and loads of cash inside of an insurance reserve. And then we leveraged, we had assets that were completely free of debt because we practice for private banking. So we're able to capitalize. That's what Chris is talking about. Capitalizing. See, when you talk about wealth building, it's about the float. It's the float. The power is in the float. However much float you have access to and you can capitalize lets you know how stable you can be when you take a loss in the market. And the market isn't just the stock market. The market is also the marketplace of your life. That's the marketplace. You lost your job. Where's your float? Your daughter's getting married. You're the father. Where's your float? Your children are wanting to go to school. Where's your float? You wanted to go and, do your business full time, whatever. Where's your float? Your business has a terrible product, goes into the marketplace. It's a catastrophe. That's the same exact thing of investing in a stock. This was a product I knew nothing about, Chris. And my gut was like, yo, no, shut it down. That was my gut. But in a partnership, you trying to trust your partner versus going with your plan, sticking to your guns, only investing in doing things that you fully understand before taking the risk. And yes, we made loads of cash. It all came right back 2 or 3 months later because of the product flop. And those partners dissipated. They disappeared. They left us with the bag because it was my merchant account, but it wasn't my product. But because we were handling that part of the business, that was what you call a market risk that I did not assess.
And you got to make it right.
But Chris, this is why I'm so when it comes to this concept of private banking, because bro, it literally saved my company.
I love it, man. That's awesome.
Literally saved our company, dog. Yes, we had to do pay cuts. Of course, you got to survive.
Well,
yes,
we had to survive. Right, exactly. Yeah.
You had to cut staff. But when most people would have flundered, imagine if I would have been doing the MPI plan. Something happens. It's just crazy. And then when it comes to restructuring a business, when you have a flop like that, depending on how much cash you have will determine how long it takes for you to rebuild your brand or clean up some of the areas that get screwed up with any bad product placement. Apple has a product place that goes bad. Guess what? They got a load of float to money, cash,
$1 billion in the bank,
baby. To do press releases, to do interviews, to clean it up, to retribute, like all of those things. But because we were anchored, now, we didn't come out unscathed. I only got one arm, but the fact is we're still alive. We're still kicking it because we practice what we preach. And the biggest thing that we're teaching you are the three major things I teach people. You got to understand cash flow creation. Cash flow creation is your ability to create cash flow at the blink of an eye. Chris was in insurance, left insurance, got into another industry, made money, came back to insurance, made money. Why? Because of a skill set that he has in marketing, understanding products, and being a super stud when it comes to doing what that's a skill set. It's a skill set. Cash flow creation. The second thing is cash flow hedging. How can I hedge this cash flow that I just created against risk? And I want to be in contracts or in situations where I know for a fact by black and white contract, my capital is protected. That's banks. Banks are not finna lend real money to ideas. You can go venture capital for that. Banks are going to lend money to somebody who's going to give a personal guarantee that you got real assets they can go get. They know they can come shut your stuff down and tear up your world, and they want more reliable people. This is why banks like to lend money to people with jobs more than they like to lend money to people with businesses. Because of what? Predictability. And when you're talking about the construct of wealth building or banking, when you talk about cash flow hedging, it's the practice of predictability. How can I be opposite of risk, but still gain and continue to grow my money and still keep my money growing past? And first of all, before you try to go get 20%, make sure your money beat inflation every day. Every day. Start there.
Long term.
Every day, every evening, every week, just in general, make sure that it can beat there. Then the third thing is cash flow multiplying. You don't get to cash flow multiplying until you master cash flow creation and you master what? Cash flow hedging. Cash flow multiplying are for people who want to be students at multiplying cash flow. That means that you understand the market. What I would tell people, even if you trust people to invest, because we run a private equity fund, right? A firm. Even if you trust people to invest your money for them, you still got to know the industry. You still got to know the fund manager. You still got to know the strategies, Chris, to make sure that you're putting your money in the right hands if you do want to take the back seat.
Totally. I mean, what you're saying, it's like trying to expect somebody to learn how to do multiplication when they can't do addition, right? Like it's, you got to go through the process. There's no shortcuts. Like it just, like when you take a step back at this and you get out of like the products and you get out of whole life versus IUL versus VUL versus investing in the market versus real estate investing versus all these different things. And you just take a step back and you just get away from all that noise and you just start thinking logically about like, all right, systematically, fundamentally, like what order of operations should I do things in? It's like, I got to learn how to stand before I can walk. I got to learn how to walk before I can run. I got to become who I need to be to get to where I want to go. And for you to think that you're going to be, you know, from where you are right now, and you're just going to magically give people money and it's going to grow for you and you're going to get where you want to go is just, I mean, it's delusional is what it is.
Yeah,
you know, but we are a nation full of delusional people, apparently. I mean, for the most part. And what you said is 100,000% true is like when, you know, we talk to 10, 20 people a day, you know, about this money stuff. And the greatest financial need that we see is more cash flow. The greatest financial need that we see is not, how do I get a better return in my investments? It's not, you know, anything of that nature. It's not even how do I pay down my debt? It's how do I create more cash flow? Because no matter what, whether I'm saving right now, whether I have debt, whatever, the need is more cash flow. And the only variable to your ability to create that is you. And so if you're not taking that accountability like super, super personally, right? I would argue the reason you're struggling right now, and this is what I've been like really harping on, and it's something when I'm writing the latest version of my book, is the reason you're struggling is because your money is not in alignment with your values and your beliefs, and your subconscious is fighting you. And like we're born, and there's this great book called The Ant and the Elephant I've talked about, and maybe people have seen the shorts on it, but in that it talks about when we make conscious decisions, we have 4 million neurons in our brain firing off to help us make those decisions. Our subconscious is operating at a 4 billion neuron rate. So that's like us thinking that we're going to be able to white knuckle it and make these conscious decisions just to get through. It's the equivalent of an ant sitting on the back of the elephant thinking it's going to steer the elephant wherever it wants to go. You have to, if you want to get where you want to go, you need to do the hard work. You need to reprogram your subconscious. You need to read personal development books. You need to grow in your leadership. You need to become a better person overall and work hard and become somebody that actually does what you say you want to do. And you need to convince yourself first that you can do it before you can convince anybody else.
And I think that's right on the money, bro.
I mean, ironically, it really has nothing to do with money. It has to do with us as human beings and the human condition. And money is just a part of it.
Yes. I think that, I don't know, man. I think that when you really appreciate, like really like true gratitude, have true gratitude of just the income that you currently make. And you really take a look across the world, especially if you're in America watching this, and you don't have this thing inside of you that makes you want to be a better steward. Like, would you give your children to a daycare or to somebody without vetting them? Would you want to see if they have pedophilia or if they've ever touched anybody, if they got felonies? Why you got a felony? How are you with my children? And even still, you observe. Mothers don't even like leaving their children with the fathers because, you know, we just be in there like, do what you got to do. Just don't talk to me today.
Nice.
So if you're like that with your children, which are very valuable assets to you, why are you not like that with your money? Why are you not? You don't let anyone just drive your car, but you let anyone manage your money and tell you what to do with your money without verifying if they are who they say that they are. Like, these are things that we got to start addressing and getting to the point to where a lot of us are trying to get to Z when you really just need to go from A to B. And A to B is a better lifestyle. And let me tell y'all something. cash flow is better than any amount of money in an account. Let me tell you, money in an account, say somebody had $1 million, but you have no idea where to start. You're in a worse position of somebody that got $10,000 every month coming in that gives them a fresh start every month.
Yep.
Consistent, guaranteed, or considerably guaranteed cash flow is coming in from your business, from your endeavor, from whatever it is. This cash flow that's consistently coming in, it gives you a chance to start over. It gives you a chance to make mistakes. But if you only got this million or this lump sum of money with no cash flow creation skill sets, with no cash flow hedging process, you're going to flat out run through that money faster than you can say, I'm rich.
Amen.
It's just as simple as that.
True. So true.
As simple as that.
So true. Yeah, man. I mean, and I know we're running up on time here because we got a hard stop today, but man, I mean, you hit the nail on the head, and that all comes back to the subconscious too. Like what you believe you can do, you'll put more effort into. Like the human brain only allows you to put 100% of effort into something you believe with 100% certainty you'll be successful with. And so I promise you, you're making 100 grand right now. You take inflation into it. You take the 4% rule, all that stuff. You're going to need $10 million 35 years from now just to be able to live and survive. I don't know a person alive where your subconscious is going to believe you're going to accumulate $10 million in your retirement account to survive. You know what I mean? But I can promise you, you could probably do some cash flow investing through real estate, through business, through, other cash flow options where you can get to $10,000 a month. And because you believe it and you've seen it and you've touched it and you feel it and you've earned that already in your life, your subconscious is going to be more likely to believe you and adapt that. And so from an execution perspective, you've already won half the battle, if not 80% of the battle.
Yeah, I think you're right on the money. And I'm gonna leave y'all with this.
Yeah.
It took you your entire life to be in the financial position that you're in. It took your entire life to make up the position that you're in. Stop trying to change your life in a day. First of all, come to grips with where you are. Acknowledge it. Okay. From that acknowledgement, have a blueprinted plan on first learning what are the guaranteed strategies in today's day and age where I can add more value to society and make increasingly more capital than what I'm currently producing. And how can I turn that into some bit of consistent streaming of cash flow? That's not you trying to become a millionaire. It's not you trying to become rich. It's not you trying to go get in a big fancy house. It's not you trying. No, it is how can I anchor my life first to not be a liability to myself? That's the first step. The second step is how much float or moat, as they call it, M-O-A-T, is the protection between your kingdom, and a moat is like almost like water around your kingdom to protect it. So when you're talking about this wealth building, the wealth building game is not the game of how fast can I get to $1 million. The wealth building game is how many layers of protection from my kingdom can I provide myself. And along that time, the more protection that I have, before you know it, your kingdom's here, your protection's here. And if you were to lose some, lose in the market, lose in the asset, you're far away from having to have your kingdom up in flames because you put a bridge or you put a bunch of different protections in between your kingdom. Your kingdom is your family. Your kingdom is your finances. Your kingdom is your spirituality. Because a lot of y'all fail to realize that a lot of us would be much better people if you were fine. You didn't have to worry about your finances. Much better people. Jake, what do you mean? Okay, if it costs your family $30,000 a year to live, $40,000 a year to live, how many times can I get to $40,000 in a reserve?
Yep.
How many times can I get? Forget swinging for the fences.
Dude, that's our episode next week. We got to talk about this in more depth because now you're opening this like box and I want to go deeper and you got to go.
Okay. So, all right, so listen, we're going to talk about this. But how many times can you hit that salary or your need basis, not your salary, your need basis to survive in between? And from there, I can promise you, By the time you look up, you'll be more well off than you can freaking fracking imagine. That's all I got to say, Chris.
100%, man. 100%. So we're definitely getting into that next week. So it's awesome. So guys, we got to roll. We're going to cut this short, but I thank everybody for being here. Hopefully people got value from this. I think you did. I had a lot of fun, if nothing else. So,
oh shoot, Chris, I didn't add my YouTube to this thing.
Oh no, what you doing? Well, next week, I'll get the I'll download it and you can reshare it after the fact. Okay.
Okay. Yeah, we'll do that.
All right. Rock and roll. All right, guys, we're going to roll, dude. Have a good time and we'll see you next week. Later, guys.